How could good economic news be bad for the stock market? This last week, we saw jobs numbers that just doubled their expectations, revised the last 2 months upward, and the stock market went down. We're going to talk all about it. I'm Adam Anderson, owner and founder of WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for joining us.
We're glad to have you. We're going to talk about what happened. If you're following the market, you'll notice that Friday really sold off, and it was because we had job creation. I expected about 86,000, and it came in about 175,000, double what the expectation was. And this is a positive indicator for our economy, which means that the economy is strengthening and getting better, which means that they're not going to cut interest rates because they generally cut interest rates when things aren't good. And interest rates going up is not what the market wants to see. They want the interest rates going down. And that's a positive for bonds. It's positive for our stocks. It's good for people that are borrowing money, businesses and such. It's cheaper money. So when potential for interest rates going up means money is not going to be as cheap. So that is a headwind that we're looking at coming into what is traditionally one of the weakest months of the year, June.
Yeah, historically, since the 50s, June has been either the worst or the second worst month of the year as far as the stock market goes. Just generally very choppy and very quite often it's down for the month. So it wouldn't be too surprising, especially after the very strong run we've had in April, May, to see a bit of a weakening into June.
Well, the market did break with this significant trend that it's been in. And just to look at the S&P 500 real quick and where we are, we've been in this trend really from the middle of March of this year in a upward trend this direction. And you can see here, I'm going to draw a little line on that. It just broke out of this trend over the last 4 trading days, and it really accelerated on Friday. The market was down that day about 2.5%, 2%. So I know the NASDAQ was more really led by tech, and the semiconductor sector led that down. Now, statistically, when we have a down day on Friday, usually Monday is a bad day. And just a case in point, if you have been around long enough, the October crash of 1987 was accelerated sell-off on Friday, which led into the crash on Monday. So we did come in today with a little bit of white knuckles, but we actually had a nice little bump for most of the day. It came down a little bit, but we still ended up positive for the day. And that is one bright spot on this.
Yeah, it's definitely not all red flags right now. We did see that strong recovery today, which is a good sign that the market could hold on. What I'm really looking for is the CPI inflation numbers that come out on Wednesday, because really that will provide a lot of guidance to the Federal Open Market Committee as to whether or not it's necessary to raise rates. I know with the new chairman, Kevin Warsh, coming in, who was very expressive about his ideas that lower rates are better in most cases. But there's a whole committee that needs to decide these things. So if we get a high CPI number, high inflation, it's much more likely that we will get rate hikes moving forward. Where if CPI stays low or lower, we might even see Kevin Warsh push through the committee the idea of rate cuts, which up to this point hasn't really been on the table. So it'll be interesting to see, and that we'll be watching that number closely.
Yeah, so it's going to be interesting because there is a difference of opinions, economic opinions that Kevin Warsh is introducing to the Federal Reserve Board, and this that's basically says that a strong economy doesn't necessarily mean that you have to raise interest rates and cool it down, that you can let it go and do its thing. So I did want to point out on the chart for the S&P here that we did have a kind of this low from before, and it created a little bit of a downward, and it kind of came right down to that. So I'm really looking at today is maybe that this low that we saw a few weeks ago, maybe we'll hold and we'll bounce around this. So I'm a little optimistic here that maybe we'll create a new base around that.
So what happens if the market doesn't hold up, if CPI is high and we see this rotation away from tech and semiconductors continue? Um, in that case, one of the things we look about is, and I was looking earlier this morning at a company called Elf. It reminded me of the lipstick indicator. This was something coined back in 2001 by the Estee Lauder chairman, where he talked about, hey, when recession goes bad, people enjoy little luxuries like lipstick, fitting coming from a cosmetic company. But this is something we see. This was obviously back in 2001 on the heels of the dot-com bubble bursting, um, maybe timely there. But also, ELF did very well in 2022 when we were experiencing all the inflation, post-COVID inflation. So that's something we look at as potentially. Obviously, they have had issues. They've been in a downtrend for a little while, and that's largely due to the tariff concerns. They import a lot of their products from China. We know Trump has not been a big fan of products coming in from China, and so there was a lot of concerns there. But if we do see inflation, they might turn back up, and it might be an opportunity there.
Well, it certainly had a big day today. It was up 5.5%. And surprisingly, they had blowout earnings the last quarter. They estimated 0.009 cents, and they came in at 32 cents. That is an enormous beat. So the fact that it hasn't gone up more than this really probably just is the overhang of tariffs on this company. But back in 2008, after the financial crisis, and people really didn't want to invest in hardly anything because they were so shell shocked from what was going on in the economy during that period of time. I did start buying Estee Lauder under that premise that people will always buy makeup. I was told women will always buy makeup. And I thought that would be maybe a worthwhile thing. So I started buying some Estee Lauder back in 2008 for some clients, and it did very well. And also beer stocks. People always drink in good times and bad. So there's some of my clients out there that still have those beer bonds that I was buying back then. It's like, hey, these things are going to be around. And here we are 18 years later, whatever it is, and they're still paying out. So some fun things, and also just a testament to long-term investing on that. So, yes, as we look in this coming week, we got a lot of headwinds. We're going to probably be a little bit more cautious through the month of June. Again, I just want to, if you just found us, this is really a commentary for our clients to know what we're thinking about. But if you found us, please like, subscribe, leave a comment. We'd love to hear what you have to see, or you could look at our contact information at the end of this video.
Yeah, thanks so much for listening. I will say that we are aware of the SpaceX IPO on Friday, and we've gotten lots of questions about that. So look forward to hearing about that next week. If you're interested in meeting with us, we do offer free initial consultations to see if we could be a good fit here at WealthGuard Advisors. We are registered directly with the Securities Exchange Commission, and part of that is a fiduciary responsibility to our clients, where we're obligated to act in our clients' best interest. So we'd love to sit down with you and see if we could be of service, maybe discuss what's going in the markets, what's fitting for your retirement account, and help you have the best retirement and financial health that you can. Thanks so much for listening. We'll see you next time.
Thank you for listening. Have a great week.